Right now, XRP has some of the strongest fundamentals it's had in years, and the price is barely moving. Whales are pulling coins off exchanges by the tens of millions. Institutions are quietly building positions through ETFs. Ripple just aligned itself with some of the biggest financial names on the planet. And the chart? The chart looks like nothing's happening at all. Now, I'm Alina, and around here we talk about wealth. Before we go further, this is not financial advice. This is not a recommendation to buy, sell, or hold anything. This is educational and entertainment purposes only, and you should always do your own research before making any decision with your money. Okay? Good. Now, if you're new here, hit subscribe, because we talk about exactly this, the gap between what's actually happening in the market and what the price is telling you, every single week. So let's restate the tension, plain and simple. You've got a coin whose real-world usage metrics, network activity, on-chain settlement, exchange outflows are trending up, and you've got a price that's trending sideways, or worse, quietly grinding down. Those two things are not supposed to happen together, right? In a normal world, strong fundamentals and rising demand should push a price higher. So when they don't, when the fundamentals go up and the price just sits there, flat, almost stubborn about it, that's not nothing happening. That's a signal. And most people are going to miss it, because most people are only watching the number on the screen. Here's the thing. I want you to really sit with that for a second, because this is where most retail investors get shaken out. They see flat price action, they see red candles even, and they assume flat price means nothing is going on underneath. But that's backwards. Price is the last thing to move. It's the lagging indicator, not the leading one. So if you're only watching price, you are by definition always the last to know. Let me give you a picture, because I think this makes it click. Imagine a farmer in early spring. He's planted his seed. Nothing is visible above the soil. Not yet. If you walked past that field, you'd say, nothing's happening here. But underneath the surface, root systems are spreading, water is being pulled in, nutrients are being processed, the entire foundation for a harvest is being built, quietly, invisibly, while everyone above ground sees flat, brown dirt and assumes the season's a bust. And then one day, seemingly out of nowhere, the field is green. Except it wasn't out of nowhere at all. It was months of invisible work finally breaking the surface. That's what's happening with XRP right now. The soil, the infrastructure, the institutional plumbing, the regulatory groundwork is being worked on aggressively. And the sprout, the price, just hasn't broken the surface yet. So when you're staring at a flat chart feeling like nothing's happening, I need you to understand you're looking at the dirt. You're not looking at the roots. Now let's talk about what's actually happening underneath, because this is where it gets interesting. Whales, meaning large holders, have been pulling significant amounts of XRP off exchanges over the past several weeks. And that matters, because coins on an exchange are coins that are available to sell instantly. Coins pulled into private wallets are coins being taken out of circulation, coins being positioned for something longer term. That's not what panic looks like. That's not what people getting ready to dump their bags looks like. That's accumulation behavior. That's patient money moving in a direction, quietly, while the price sits still and lulls everyone else into boredom. At the same time, spot ETFs tied to XRP have continued pulling in net inflows, meaning real capital, institutional capital, is buying actual XRP off the open market to back those funds. That's forced buying. That's not speculation, that's structural demand. And it's happened for consecutive weeks even as the price struggled. So you've got two separate categories of sophisticated money, whales and institutions, both quietly accumulating, while retail sentiment sits somewhere between bored and afraid. And then there's the bigger picture, the infrastructure story. Ripple has continued embedding itself deeper into the institutional financial system, aligning with major payment and stablecoin infrastructure that some of the largest financial companies in the world are building on. Now, I'm not going to sit here and tell you that guarantees a price outcome. It doesn't. And anyone who tells you it does is selling you something. But what I will say is this. Infrastructure adoption at that level doesn't happen because a handful of companies feel nostalgic about blockchain. It happens because there's a utility case being built, quietly, brick by brick, underneath a price chart that most people have already gotten bored of watching. So here's the paradox restated, one more way, because I want this to actually land. Imagine a scale, the kind with two hanging trays, right? The old-fashioned justice scale. On one side, you're piling up fundamentals, adoption, institutional demand, exchange outflows, regulatory clarity slowly forming. On the other side sits price. Normally, as one side gets heavier, the other side should respond. That's how a scale works. But right now, it looks broken. One side is clearly loading up, and the other side just isn't moving. Now, a broken scale doesn't mean gravity stopped working. It usually means there's friction somewhere. Something's holding the mechanism still, temporarily. Could be macro pressure, could be broad market fear, could be leverage getting flushed out of the system. But friction is not the same as failure. Eventually, physics wins. Eventually, the scale moves. The question was never whether it would. The question is whether you're still standing there when it does, or whether you talked yourself out of the position months before. Because flat felt like wrong. Okay, now let's pause. Now, personally, and again, this is just me, this is not a directive, I've positioned myself as someone who believes patience gets punished in the short term and rewarded in the long term, almost every single time, in almost every market cycle we've ever seen. The people who get shaken out during the boring phase are almost never the people who are sitting there at the top of the next cycle talking about how obvious it all was in hindsight. It wasn't obvious, it was uncomfortable, it looked like nothing was happening. And they held anyway because they understood what was underneath the soil. Now here's something a lot of you are sleeping on, and I want to bring it up because it ties directly into patient positioning, and that's the tax piece. Because look, even if you get the what right, even if you correctly identify that XRP's fundamentals are strengthening while everyone else is distracted by a flat chart, if you're holding that asset in a normal taxable account, you're setting yourself up to hand a big chunk of any future gains straight to the IRS. That's not a strategy, that's just leaving money on the table by default, because nobody ever told you there was another option. This is why I'm such a big advocate of holding digital assets inside a self-directed retirement account, specifically a Roth structure, where your growth has the potential to be completely tax-free down the line, instead of taxed on the way out. Think about that for a second. The same accumulation, the same conviction, the same patience through the boring phase we just talked about, except structured in a way where the government isn't your silent business partner on the upside. We've partnered with a self-directed retirement platform that makes this simple to set up, and right now they're offering a funding bonus for new accounts. I'll leave the details below. This is the kind of structural move that separates people who got the trade right from people who actually got to keep what they earned. So let me leave you with this. Right now, everything underneath the surface of XRP is doing exactly what accumulation looks like, quietly, unglamorously, without a single green candle to reward you for paying attention. And that's uncomfortable, I know it is, because we're conditioned to trust what we can see immediately. But conviction was never supposed to feel exciting in the boring phase. It was supposed to feel like patience. It was supposed to feel like holding still while everyone else got distracted. So here's my question for you, and I actually want you to answer this one honestly in the comments. When the fundamentals are screaming and the price is silent, do you trust the noise you can see or the signal you can't? Drop it below. I read every single one of these, and I want to know where your head's really at right now. Are you accumulating through this, or are you starting to doubt it? All right, that's what I've got for you today. As always, do your own research, make your own decisions. This is your money and your future, not mine. Stay wise, stay wealthy, and I'll see you in the next video.